Hello, this is Edna from Regina, Saskatchewan. And when you're talking to a potential investor and they say that return isn't high enough, do you know how to answer that? Stick around and I'm going to tell you how. To a potential investor and you present them an opportunity and they say something to you like, well, that return isn't high enough. Ask them this question. Say, in comparison to what? What kind of returns do you get now? What do you invest in? Because then that gives you a really good starting point to discuss further with them. Because a lot of investors don't understand. We sent out an apartment building investment just recently where the return on it in the first year is 13.6% based on their investment. And an investor said, well, that's not high enough. But the lady they were talking to did not have the questions to respond back. Like, in comparison to what? They might say, well, I'm getting 13.6% return on my mutual fund. And just say, do you get that every year? Because you know what? This is our first year return. Do you know that the second year it's even higher? And do you know that one of the reasons it's even higher is because we have consistent mortgage paydown, which in my books is the very basis of investing in real estate. Because if you invest in real estate and you get nothing but mortgage paydown, that's still like 6 or 7% return on your money. And that's a pretty solid return on your investment and pretty safe return on your investment. Did you know that apartment buildings are one of the safest investments out there? And the reasons why are, you know what, people always need a place to live. And even if an apartment building has 8, 9, 10% vacancy, you can still make money on it. And let's say worst case scenario, we had 10% vacancy over 20 years. What are the chances of that happening? But let's say we did. At the very worst case scenario, we've got our building paid for. That is a good return on your investment. So you just have to know how to answer some of those questions that people put out, because you know what, in a lot of cases, they don't even understand what they're saying when they say that's not a good enough return. Because what do you expect? You know that in most investments, if you're looking at anything higher than a 2% interest or 2% rate of return on your investment, you're looking at some higher risk investments. This, or an apartment building, are considered one of the safest investments. And one of the reasons you can use as a backup there is, you know, CMHC will insure an apartment building and give you under 2% interest rate guaranteed for 5 years right now. Why do you think that is? Do they think that's a pretty safe investment? Do they do the homework on the apartment building? Inside and out. They need your rent roll. They send someone to inspect the building. There's stability reports done. There's foundation reports done. They check that building inside and out. And each building is run like a separate entity, like a separate business. And they qualify the mortgage based on that. So next time somebody says to you, that's not a good enough return on my money, you've got an answer for them. Hope my tip helped today. And if you'd like to reach out with me with more questions, it really helps me being able to do videos every day if you reach out to me with some of your questions. I appreciate it, and it helps other people learn as well. So please shoot me an email at edna@multiplewaystowealth.com with other topics that you'd like me to do a video on. I'd love to be able to help you.